Today I'm going to recap how I was able to make a $500 profit trading ES short in only about 4 minutes today. Right, risking about $112 to make 587 using really simple concepts I'm going to break down that anyone could understand. I'm going to show you guys how I came up with this plan, levels, and everything in between. So again, if you guys want more videos like this, comment any suggestions, and let's get right into the trading breakdown. So I always zoom out, and what you could see here is the S&P was in what I call balance, where the market's basically consolidating, right? We had a trending move up followed by consolidation, and my key level was this 4358 right here, and I'll show you how this level developed. But it was really important for me because if we have a range like this, what I like to monitor for is acceptance or rejection, meaning if we consolidate for this long, spend this much time, this much volume, the market should technically break out higher than this. And if it doesn't, then you have to ask yourself a question of why is this not happening, and it could be a great opportunity to take the market short, which I call a peek above and fail, or look its head above and fail. It's basically like if a mole's coming out, like whack-a-mole, you whack it right back in, it's gonna go right back into the range. Like whack-a-mole is how I think of it. I don't know how to explain it any better than that, but it's like we come out, whack-a-mole, back into it, and then you could play it short. I'm going to show you guys how this 5348 level developed, and I'll get into my entry and all that good stuff. So let me just pull up Chrome here. Alright, so pre-market plan, let's get into it. So you can see this 5348 level was right here, and I'll show you how this level developed. But mainly, if you look at this, the way this volume was distributed here on this day, or excuse me, over these past few days, we were basically in balance. Like I said, look, this B stands for balance. Look at the volume traded here versus the volume here. So the market's moving sideways. Not only is this 5348 the upper extremity, upper balance, but also it's a level that formed from the tape where I saw selling activity on Thursday. So you could see I drew these two lines to represent the range. It shows the same thing here. It's just visually different. And I'll show you guys why this 5348 level was so key for me. So this key level developed for me on this day here. So May 16th is when this level formed, and I'll show you guys why this level formed. So I'm going to pull up the order flow. This is a footprint chart. So each of these footprint candles are 5 points, and what you're seeing here is delta. So basically seeing the difference between the ask and the bid volume. And what you're going to see here is on this day, I'm showing you this day right here, the market comes up and there's some selling activity at this 5348. What I mean by that is you could see all of this positive delta which hits the offer at this 5348, yet the market can't move higher, and then we sell off of this. If you're watching this in real time, everything's way easier to spot in real time. After the fact, it's a little bit harder. That's why I always stress to watch the tape in real time. But there was tons of buying here at this high, and the market couldn't move higher. And that's the high of the day. The market ended up selling off from this, so that becomes an important area that I have to monitor moving forward. And if we fast forward, right, what you're just seeing is the next day. So that was Thursday. I'll show you the next time we come into that. Friday was consolidation. We come right back into this 5348 level on Monday, right here. I'll show you guys the tape again. It's the same exact thing. There's unusual activity there. There's a large seller sitting there. We break above the high. Look, this is a high a day. Market breaks the high. Look at this. 700 positive delta, 282. We break the high and immediately get back under right at this 48 level, and then that's the high a day again. So there's some massive selling activity out of this. I see this as a large seller sitting there, and it also aligns and ended up being the upper extremity. And then again, look at this. You can't make this up. This is why the levels from the tape are the best, because they're organic. They're straight from the market auction. There's no fluff. These are actual sellers and buyers in the market. And if you could put yourself in the position of these sellers and buyers, it gives you such a great edge. So I know that that's a key level, this 4.8. We come up into it. Look at this. You can't make it up. 4.8, 5.2, give it like 4-point buffer. Look at this. High a day again. So now the market's forming this balanced range with sellers at the high and buyers at the low. Okay, so I showed you guys where I got that 4.8 level and why it was so key for me. Let me just pull it back. And you could also see this 5348 was this upper extremity, like from this balance high. So massive, massive key level. So what triggered for me was pre-market plan. It was where was it? It was either scenario. Yeah, this one. I was watching for continuation or if we got back in the range. So if ES gets back below this 4.8 on strong selling, what I mean by strong selling is the tape being, very heavy, which I consider aggressive sellers entering the market. And if you look at the tape, it was super heavy. This is what I mean by strong selling. Look at the red bubbles coming in, which means aggressive sellers hitting the bid. Look at this volume to the downside. This is what I mean by strong selling. So we broke out of the range and there's strong sellers entering the market under this 4.8, right? Even the selling off the open was super strong, but it really started to get heavy around this area. Look at all this selling. So back to the pre-market plan. I just wanted to break down that strong selling point there. Super important to confirm with the tape, which I said look above and fail. And I also using yields, but it wasn't that significant today. I want to look for ways to play short, targeting this 5330. Now, usually the rule of thumb is if we break out of a sideways range like this and fail, the first area the market should head towards is like the 50% or like the midpoint of the range. So the 50% is around this 30 area, and then the last area it should head towards is a balance low. So we haven't traded there yet, 13s, but usually it trades the 50% first and then the balance low. But the real reason why I was targeting the 30s is because if you look at a market profile, it was poor structure, which I broke down on like my past several videos. So if you want to hear about poor structure, you could go back to any of those videos, and I break it down really well, but I'll break it down briefly. Just need to pull up this again. So let me see. Basically, when there's minimal volume, if you zoomed out on this TPO, you could see it better, but there was basically no volume in this area where the market basically created like a gap, or what I call poor structure, which usually gets repaired, meaning like this 30s. I wish I could show you guys a better visual. Matter of fact, I'll just show you guys a better visual right now. Just give me 1 second, because it's harder to see right there. Just give me a second here. Let me just screenshot it for you guys. Alright, here I'm screenshotting it. I'm just going to screenshot yesterday's profile. Right here. Let's go back to here. Okay. Let's find that shit. So if you guys look at yesterday's profile, this is basically time and volume. What you'll see here is this major gap. So there wasn't any volume distributed. And I usually call this poor structure. And this was the 30s right here. And this is like what I call double distribution. So this usually gets repaired. Especially if the selling's heavy, there's a higher probability we fill this gap and this poor structure gets repaired. So I thought that this could get cleaned up, aka trade back into the 30s, especially back under the 4.8 zone. Now I'm just watching the market develop in real time. And you can see by these big red candles, super heavy selling. And we had 9:45 a.m. news, so I didn't trade until that because that shit usually moves the market. And I don't like to be in a position when it comes out. But right after 9:45, you can see we're under my 4.8 level. Clear selling activity where we broke out of the range and failed. And if you look at this, I'll show you guys another visual of this. You'll see that there was nice excess at these highs, meaning there wasn't a lot of volume distributed. So the market basically broke out, and this is excess. This is usually a good indication of a short-term high or low because there was a lack of activity above the balance high, and then we returned back into the range. So we were under 4.8s, and now I'm going to get into my Discord where I entered in real time right here. So let's scroll up. This is before news came out. I said I wanted to pull back into, guess what, 5348 to play short. But as long as we could remain under this 4.8, I want to play short right here into 30s. So either a retest into that or we hold below it, sellers step in. News ends up coming out, and I see some selling activity here under 4.8. What I saw was we kept coming into this 4.3 level, which was under 4.8, like I said. So I was looking for shorts, and there was tons of buying. Came 1, 2, 3, 4 different times that got shut down. So if I could show you guys a footprint, you might be able to visualize it better for yourself. Give me 1 second. I'll show you guys what I saw. Hopefully it's clear here. Yeah, you can see it here. I think it's right here. No, excuse me. This is Wednesday. Okay. Look at this. Do you see how we were under? First of all, you see how aggressive the selling was, and then you see how we were under 4.8. And look at this. There's tons of buying here. Positive 317 lots, positive 207 lots into 4.3. Market couldn't move higher. I saw this as weakness, and I took the market short. All for this analysis. All right, I took the market short. On Bookmap, it looks like this. It's just the same exact thing. It just shows it differently. It's all the tape. And let me just pull up my TradeZella. Let me show you guys my entry. So I was risking only, I believe, so look, short entry here at 4,150. My stop was at 4,375 because it was right above this high. Right, 4,375 is a tick above these highs. So going back to that. Entry at 4,150. So I was risking 2.25 points. I was risking 2.25 points on this to potentially make 11.75 points. Risking 2.25 to make 11.75. To simplify, you could say I was risking 2 points to make 12. Damn near. Is what my risk to reward was, and you can see I realized 5R. So you can see off that selling, I took the market short. Right there, you can see right at that 4.3 execution. I was only in the trade for 4 minutes, and this thing just melted off that analysis. If you look at the running P&L, it's not updated yet because the market's not closed, but it worked out immediately. Right after I entered, look at this. Market sold off. Look at this aggressive selling. And it was a very stress-free trade, but it had a lot of volatility. So the market was moving very fast. Under 4.8, market should repair. I meant to say these 30s with the heavy selling. Once we sold off to manage my risk, 7 to 10 points in my favor, my stop loss became my entry, and I was looking to press it into my 30 target that I showed you guys from the pre-market plan. Look at this. Look how aggressive that selling was. We ended up pulling back, and I meant to say, I'm typing super fast. I don't have time to type super slow during this. I'm just trying to get my thoughts out, so there's a lot of typos, my bad. But I meant to say ideally the bears want to defend the 3.8 on this pullback, because my entry was here. I wanted to see sellers defend it. You can see there was clear selling at 3.8, and you look at the selling 3.8, and you can see here on that. Look at this 3.8. There was negative 1,400 negative delta at the 3.8 right there. So I saw sellers stepping in. I was like, hey, I want them to defend that. Still have some cushion. Boom, 3.8 steps in. Buying gets shut down right into 3.8. Very textbook, right? We come right into 3.8. Look at that. And then we sell off into 30s. Look, 30s triggered there. All out. Market moves so fast, it's hard to update. Once the 3.8s held and we were below my entry, it was game over. And you could see, pretty sure the high was 3.8 to the tick here. I'm not sure. All I know is that we defended the 3.8s. Yeah, 3.775s. And yeah, that was a pretty straightforward trade. I mean, it was pretty textbook of break out of a range and fail, and I showed you guys how I came up with the levels, how you could come up with the levels on your own if you have access to order flow, and my entry confirmations and all that. So yeah, that's a quick trade breakdown. It was a really nice short. That's why it's so important to have both bullish and bearish plans, because if the market looks like this and we're at all-time highs and you're biased to the long side and all you could think about is taking the market long, then you're going to miss out on nice opportunities, because you want to come in and have both bullish and bearish scenarios, or else you could miss out because you don't want to have a bias. The market could go up or go down, obviously, we all know this, but you don't want to have a bias when you come into the market, and that will allow you to capitalize on opportunities like this, because a lot of people weren't ready for this. This caught a lot of longs off guard. This caught a lot of people off guard. I'm sure not a lot of people caught it. It happened so fast. It was tough to catch, in my opinion, unless you had a very nice entry. So yeah, that was a trading breakdown.